Okay, folks, welcome to Thursday night Members Inner Circle. Hey, Colton, where you been? I haven't seen you in a while. Good to have you. What we're going to do tonight is we're going to talk about Amazon, our Amazon trade. We'll recap that. We'll go over the headlines. So a few headlines that I think that the markets are finally beginning to wake up to the reality of what's going on. We've been talking about it all week long, about the supply chain disruption that is just simply not being factored into this market. And we'll go into the weekly charts as they appear on Thursday night. It really doesn't matter until the end of business on Friday. However, Thursday night gives us an inkling of how we're closing out the week and how we may want to adjust portfolios. If we want to add, do we want to reduce? Do we want to open up a new position, or do we just want to sit back and say, well, let's let this market come to us? And then we'll go take some members' stock chart requests. Now, if you're catching this on the replay, please, if you want to join in, please join. 14-day free trial offer. Join us and engage, please. All right, let's get to it. Let's talk about, first I want to talk about Colton. Had to travel for work. Well, hope you had safe travels. And it's good to have you here. Okay, let's talk about Amazon. Yeah, Amazon. Let's go to that first. So Amazon, I was on the TrendSpider live stream on Sunday evening last, and we were talking about how I was bearish on the triple Qs in particular. Why? It's because they were just so overbought, and they become even more overbought. We did short Amazon yesterday, and we entered it on the 12th, closed it out today, and we booked, what was it, $8 and change per contract? We booked $8.10 per contract. This would help. And that was for roughly a 27% gain on that trade within 12 hours. Not a bad trade. Why did we decide that we wanted to short Amazon? The reason is we couldn't short it simply based upon my thesis that the markets were not discounting Amazon due to the fact that they have such an exposure to China. Think about all the goods that they sell out of China, and China is closed for business. And their stock price just did nothing but go up. And the stock market is supposed to be a discounting mechanism, a forward-looking mechanism, discounting when you see events on the horizons that could impact a company's earnings. The market is being managed right now. It's being managed by the Federal Reserve. This is not the free market. They are spiking this market higher. And I'll go over a couple of articles in a moment about how China is worse off than what most people believe, and how the Federal Reserve is following through on their commitment to pull back on the infusion of capital into the markets, for now anyway, until of course everything goes to hell in a handbasket. So for technical reasons, we were looking for signals by the market that Amazon was done going up. And we looked at the chart on the 11th, and I said, you know what? We are very close to the third standard deviation Bollinger Band, and they sold it off. I want to see another move up higher here, which they did. And what did they do? They sold it off yet again. So we had 2 days worth of topping action on Amazon. So we opened up a short position, again, using put options, 21.60 strike price, and the shares gapped down this morning. We took advantage of that and just closed out the position. Nice trade. And we are still looking to add to our short position even further than what we are right now of the triple Qs. We'll go over that chart in a moment. Let's go over a couple of headlines. Off of Zero Hedge, Caterpillar sales post biggest drop in over 3 years as North America plunges. North America. This is the greatest economy ever. But North American sales plunged. It's not Chinese sales. It's not Brazilian sales. North American sales. Big shock, right? China. China has ground to a halt. On the ground indicators confirm the worst case scenario. Now, what Morgan Stanley did is they did an analysis of pollution levels in several cities. And I'll just cut to the chase here rather than go to the charts. Air pollution was only 20 to 50% of the historical average. As Morgan Stanley concluded, this could imply that human activities such as traffic and industrial production within close to the cities are running 50 to 80% below their potential capacity. Think about that. Moving on. I mentioned this earlier. I won't spend much time here. Liquidity warnings. Fed shrinks overnight repos by 20 billion, term repos by 10 billion. And the market continued higher on this news until it didn't. It began to roll over. And we leaned into the short side today on the triple Qs yet again, and we'll be looking to add more on a break of this market. And I think it's going to happen fairly soon. So moving on to the weekly view of how we appear poised to close out the week. And I'll be honest with you, over the course of the couple of months we've been doing Thursday night stock charts live, I take a look at the charts on Thursday night, and then I do the week ahead commentary on Saturdays, which goes out to members, and that's the analysis of the week past and then a game plan for the week forward. And it's amazing how much price action actually happens on a weekly basis on a Friday. So, by no stretch of the imagination should you conclude that simply because we only have one trading day left to go, this is as good as it gets, or this is the way we're going to close out the week. It's not. What we're going to kick off with first is the yield curve. This is a monthly chart. Just want to do a refresh. Make sure I get we went lower. Fresh off the presses, a new weekly low, a new monthly low. We haven't taken out last month's lows yet, but the point of the matter is that we continue to see the 2s versus 10 yield curve move towards inversion. And that is not a good thing. We've already inverted once. Usually you get a double bottom setup, a W formation, and then when we steepen, that's when the markets begin to fall apart. Do you go selling all your stocks right now? No. This can go on for a couple of more months. And given that it's an election year, they'll make sure it goes on for a few more months. Switching over to the weekly charts, the TLT, not a good week for the TLT, down about a third of a percentage point, a little bit more. We'll see what tomorrow brings, given that the markets began to lighten up today, weaken up today. The 10-year yield, strong rally this week, but I believe that this is a dead cat bounce or a bear flag formation. When am I wrong about that? I'll be wrong about that if we manage to close above, let's call it one, let's go just say 1.75. And I don't think the market's going to be able to handle a close above a psychological support level like the 1.75 level. Remember what we're dealing with. We're dealing with a market that is completely addicted like a heroin addict to Federal Reserve liquidity. Once it stops, the markets goes into DTs. And it takes more and more Fed liquidity to get the same result out of the market. So the Federal Reserve may be signaling that it wants to pull back on its intrusion into the monetary system. It's not. It's nowhere near done. This is just the beginning of something really, really big to try to salvage the U.S. economy. The chips, I am not necessarily bullish on the chips. However, they are off the lows of the week. The reason why I'm not all that bullish on the chips right now is because you're seeing so much pressure on commodities. And while you're seeing inflation in financial products, you're not seeing a huge increase in prices at the supermarket level. Are you seeing it in rents? Yes. Are you seeing it in insurance? Yes. No doubt about it. So there is inflation out there, and maybe I'm pinning too much on what the consumer is buying at the supermarket. But given that commodity prices are under pressure, I'm reluctant to say all out that we're going to go into hyperinflation anytime really soon. I'm worried in the short term about deflation and then a ramp up in inflation as the Federal Reserve gets more and more aggressive, more and more involved with their QE program, or not QE. The US dollar, weekly view. You know what, let's go to the monthly chart first because it's very, very important. All right, so we always want to go with a higher level view to figure out where we're at on a lower level. So on a monthly level, we have broken out above resistance out of this bull flag setup. This is a beautiful chart. This is a beautiful chart. So while I think that the dollar is a ridiculously flawed currency, is it any worse than the euro? Is it any worse than the yen? At least our interest rates are positive. So, for now, anyway. Weekly chart. So knowing that from a higher level view, the monthly chart, we're breaking out to multi-year highs. The path of least resistance is longer term, no doubt about it, higher, assuming that we hold the breakout. Meaning, let's go back to the monthly chart for a moment. Meaning that we close out the month above this resistance level here at, what's the high here? 26.49. Let's call it 26.50. If it fails to hold this breakout, then the dollar's got a lot of trouble. But as it stands right now, the probability of the dollar closing above this resistance level is pretty good. Now, going back to the weekly view, we are very overbought. We are leaning into the third standard deviation Bollinger Band. I think that we're going to get a nasty pullback fairly soon, and this volume is simply horrendous. It's horrible. So we're being bid up on extremely light volume. Let's take a look at the daily chart. Bullish price action today on volume. MACD histogram, despite volume, despite price action, leveling off. I think we're going to correct pretty soon on the US dollar. Next up, VIX. Reversal off the highs of the day. That's a daily view. I didn't want a daily view. Where's my weekly? There it is. Folks, if you're just joining in, if you want me to go over any symbols, pop them into the chat box and we'll go through them. I'm just going to go through the weekly charts really quick. This is a crushing blow to the VIX. The fact that this breakout failed. And not only did it fail, it did what it usually does. A breakout point failure. You usually, at a bare minimum, retest prior support and many times break support. Now we have one trading day left to go. We'll see what happens. But if we close out the week like this, below the support level at 1471, that's a problem for the VIX. That's bullish for the markets. The Dow Transports, a shockingly strong week. Up over 1.25%. We're at resistance. No volume. Look at these Stokes. I bet you that we fade tomorrow. Let's go to a daily chart. We faded today. We came very close to a breakout point failure. We broke out yesterday. They just barely held it above that level today. Down volume was light. Dow Jones Weekly, up over a percentage point. Stokes still look good. They're rising. Volume rolling in light. MACD is really, really weak here. Very, very weak. Lower highs. S&P 500 up 1.39%. Breakout. Assuming that we close out the week above this resistance level. Volume, meh. It'll probably roll in light. MACD histogram, very, very weak. Here is the driver of it all. I have no doubt the driver of all of the strength in this market right now are the triple Qs. The biggest components of the triple Qs, Apple, Microsoft, Amazon, Facebook. RSI possible lower high. We have a megaphone formation on Stokes. Volume this week is rolling in very, very light. MACD still looks okay. Let's go to a daily chart. And we're building a short position on the triple Qs. Hey, Manoj, you got it, buddy. All right, so Trip Qs daily, Stokes potential double top here. We have indecision here on the 11th. Yesterday was a good day. We gapped down today, rallied it to a new daily high. They closed off the highs of the day. Will they let it drop right away? 50-50 chance. But I think the next couple of days, we'll be pulling back here. Do I think it's going to be a crash? I think the longer the odds, I think the longer the markets continue to ignore the impact. Let's do a hypothetical. Let's say that China is up and running on Monday morning. They've been out of commission for the past couple of weeks. At what point does the supply, unless they're gonna work 24 hours a day, 7 days a week to make up for the loss of manufacturing, but at what point does the market say, the damage it's done. It's got to be reflected at some point in time in the markets. At what point in time do they cry uncle? But they're just refusing to do it, and we're taking advantage of it. We're shorting this strength. Volume was light today, but volume was light to the upside yesterday. MACD histogram flattening out. Exactly what you want to see when you're leaning into the short side. Momentum is waning. Let's drill down here. Let's go to a 2-hour chart. Actually, let's go to a 4-hour chart. Then we'll do a drill down. Back half of the day, new daily high, then reversal bar. Back half of the day, down on volume. Is your MACD losing momentum? We broke down to lower lows on Stochc RSI. So what we'll be looking for is a break. One could argue that we already have it. We had it this morning. They gapped it up in an effort to retest. But let's not be pie in the sky. Let's be more conservative. Let's say that we'll use this as our data point as being the rising lower band of support. I would look to lean in to the short side on a break of support. But if they gap it down, I won't chase it. If they rally it back and try to fill that gap from the morning, then we'll look to lean in further to the short side. But I won't chase a gap down. Let's drill down further, 2-hour chart. Outside reversal bar, final 2 hours of trade. Very long in the tooth here on the Stochs. Lower highs in RSI. Volume into the close. Lower highs and lower lows on ultimate oscillator. Weak. Very, very weak. Let's take a look at the after hours action. Not much change. Okay. All right, what else do you want to talk about here? We'll scroll through the rest really quick, and we'll get to some chart requests. All right. IWM, a breakout week. Normally what happens during cycles like this is that the large caps usually lead, and then they stall out, and then all of a sudden the small caps, the most heavily shorted stocks, then they begin to get squeezed along with the what's the IWZ? What are the micro caps? Here, IWC, not Z, IWC. And the small caps are getting, the micro caps are getting bid up as well. So these are your junk stocks. These are your late stage stocks. They'll get squeezed and all of a sudden, roll over. To the banks, they're up on the week. New weekly high. Would I buy them? No. Volumes are horrible. Oh my God. There's something seriously wrong. Daily chart. Oh my God. Look at this. Horrible volume. I would avoid. Let's take a look at the deep regional banks really quick. They should have bounced this week. They did, because yields are rising. And the regional banks are more of a pure play on loans rather than the money center banks. They rely too much on trading. The XLK, new all-time highs, but take note of your RSI, lower high. You have a negative divergence. Same deal here on Stokes, negative divergence, lower highs, lower lows, yet price continues higher. This is not going to end well. Look at this volume. I drew this trend line weeks ago, pointing out that volume is dropping off of a cliff. We've spent 1 week of up volume above that line in all these now months. Wow. This is so bad. Let me point this out. I'm going to keep this chart up here for a second. If anyone wants to take a look, I'm going to take a sip of coffee. If you want to drop a note in there, tell me what's wrong with RSI. Okay, no takers? Okay, no big deal. All right, so what's wrong with RSI and Ultimate Oscillator is this. Yeah, it shouldn't be below 70, right, Colton? It should be above 70 right now. So yeah. But what I'm looking for more is that what we're having is a negative divergence, right? We're putting in higher highs, and we're very close to the apex here. Yet RSI is rolling over. Same deal here. Ultimate Oscillator. This is not going to end well. Let's drill down here. Let's go to let's do what we did before. Let's go to a 4-hour chart. Same deal. Look at this breakdown. Stoke RSI. Everything's rolling over here. And think about this. This is the leader. This is leading the market right now. We've stalled here. Breaking down. Breaking down. We should be negative tomorrow. If not, tomorrow, sometime next week. But it's coming. I'm afraid to look at a 2-hour chart, but let's do it. Colton, you said before that the fact that it didn't go above 70, that's a valid observation. It really is. Because think about it. The fact that we couldn't, with all the money that's been pumped into this market, the fact that we couldn't, with this price action, get above 70, and we've been putting in lower highs on a 2-hour basis, is unconscionable. Big volume into the close. There's lower highs, more all over the place. Now the semis, an incredible week. Up over 5.4%. Look at this volume. Oh my God. Daily chart. Look at all these gaps up. At some point in time, they're going to have to come back down and fill those gaps. So they've just been squeezing the shorts. And that's very, very finite. LABU, this is the biotech ETF, leveraged ETF. It pulled back today. I would not be a buyer of biotechs. They're right up and into resistance. Now, what began to break today, and I expected it, was the emerging markets. This is a weekly chart. They're still up on the week, but they've been rallying with the U.S. dollar. And 20% of the EDC, which is what you're looking at, is mainland China. And so throughout the entire week, I've been saying, what's keeping this thing up? The Federal Reserve. And the fact that the news won't report the news appropriately. Look at this. We're up 5. Well, it's a leveraged ETF, to be fair. Okay, 5.7% on volume that's rolling in, at best at about average. But it is a leveraged ETF. But the dollar is not going to be good for emerging markets. Remember, the dollar's breaking out to new, not all-time highs, multi-year highs. And they're gapping the emerging markets up higher with your Stokes now trading down below 50. And as I always like to say, rallies tend to fade when you have your Stokes down below 50. So I would not be a buyer Arguably, you could be looking at leaning into the short side of emerging markets right now. Daily chart, we had broken out above two support levels this week. Actually, what was Monday? Right, two support levels. We broke out resistance level number 1, resistance level number 2. In one day, we took out both of them. Breakout point failure. We're going lower here. Energy. Oil broke out on a weekly basis. I'm going to go to a chart like that, of that in a moment. The week isn't over yet. Let's see whether or not it holds it. But I still can't get excited about energy, even with oil breaking out. And keep in mind, I have a correlation here of energy relative to oil overlaid, and the current correlation is 96% of the time they trade in tandem. This is on a weekly view, no less. But that correlation, I'm wondering if it's worse lately. Nope, daily chart, same deal. Now, oil, on a weekly basis, has broken back out. I wouldn't be a buyer of oil until next week or the following week to see a retest of the breakout point. If, in fact, we close out tomorrow above this resistance level to get that retest. So right now being Thursday, if oil closes out the week where we close today, maybe slightly lower or higher than where we close out today, it's a very, very good week for oil. Daily chart. Not much headway today. Most of the gains were here on the 12th. Volume's okay. Above average volume. All right, gold. Gold has been holding up incredibly well. Now, people knock me sometimes about being long of gold and the miners, and they say, the dollar's going to rip your face off. And I did this over the weekend. Here's a correlation. Oh, that's a below chart. Sorry. Make it appropriately green. Update. So at current, we have a correlation of nearly a third of the time where gold and the dollar are trading in tandem. That is not historically the norm. And that's on a weekly basis. If you go back to a monthly view, you could see most of the time we're nowhere near that type of correlation. On a monthly basis, we're up over 80% these past several months. And the reason why we're seeing this is because of geopolitical fear. The dollar is the worst dirty shirt in the bin. Gold is the only real currency. Both are going up because everything else is garbage. So that's why gold is holding a bit, especially with this Chinese issue. So gold, the miners will remain long. Nugget weekly chart, holding support. Still not loving the Stokes here. Well, don't embarrass me here. All right, there we go. Let's say we closed at a breakout point. One could argue that we did break out. How we closed at the highs of the day, I'd say, yeah, we have a breakout, but I'm not going there. We didn't, therefore, no breakout. Want to see these Stokes hook up? RSI is looking good. Now, what I like is how we're holding the 30-50 mark. It's acting as good support. So this $30 per share mark, late in, well, most of December and much of February has been very fluid. It's acted as resistance. Now it's acting as support. So that's a good sign. So we're setting up for a move higher here. And we'll be looking to add. More than likely, rather than buying the common shares, I'm going to sell puts. Not buy puts, that's bearish. I'm going to sell puts to generate cash flow. So that's the game plan. Maybe as soon as tomorrow, we may open up that trade. It all depends upon the price action. We need to see a nice move higher on nuggets. Got to show some cojones. We're not seeing that yet. All right, let's take a look at some chart requests. Folks, if you're out there just joining in, if you want to pop in your symbols, I'd be more than happy to go over them for you. This is your time. Oddly enough, I had Alibaba already up. I had an alert fire off earlier today because it did move up higher, up and through my alert. But let's stick with our knitting. Begin with the higher level view. Then drill down. A lot of resistance here. I'll lead off. I wouldn't buy it. I don't care how good the chart looks right now. I'm not going to buy it. Do you know or understand webhook on TrendSpider? Is that an indicator? Show me where to go and we'll take a look at it. I'm not familiar with it. I'll wait for your answer. We'll come back and visit. I'll wrap up with Alibaba. I wouldn't buy it because it's too exposed to mainland China. And it's got more exposure than Amazon. The chart, RSI looks outstanding. The price action, not bad. I mean, we're looking for a reason to break out here. Were it not for this... I'll check it out 1 second, Colton. Were it not for this coronavirus issue, I think that would be a lot higher. I like the setup here. I would love to see a sell-off, a hard sell-off. But you can't buy it. We're up into resistance. This thing has not one penny factored into it for this coronavirus. If we break the support level, coming all the way back down here to about 180. Daily chart. The daily chart looks really good. It looks really, really good. RSI, higher lows, exactly what you want to see. And there was enthusiasm for Alibaba this morning, but then it faded. Even if it broke out, I couldn't buy it. There's just too much risk. I'm worried about, waking up on a Monday morning and all of a sudden you have the futures bright red, down triple digits on the Dow. I just don't want to. I don't want to be exposed to that. Absolutely, Colton. So, me personally, I would avoid it for not necessarily the chart, more for the risk, the risk associated with China right now. NOC, good. Oh, Northrop Grumman. Oh my God, I haven't pulled this chart up in years. Grumman used to be the major employer, the number one employer on Long Island where I live for decades. When they pulled out, it wasn't good for the Long Island economy. They have a small footprint here, not as much as they used to. They were building the F-14 fighter jet, the Tomcat here. Anyway, long time ago. I actually even applied to go to they had a technical school at Grumman, and I decided against it in the end. I got accepted. I took a test, everything, passed it, and I went elsewhere. Anyway, memory lane. Okay, monthly view. Ugh. Gotta love it. Gotta love it. Supported 334. An inside week, but we broke out last week. We're pulling back. We're doing a retest. Actually, I'm sorry. This is a monthly chart. We broke out last month, pulled back. We're doing a retest this month. RSI right direction. Stokes the right direction. Nice orderly pullback. I think the shares could be bought with a stop right below, say 355 per share. Daily chart. We're right up and into resistance on a daily basis. If you wanted to wait for close above resistance, what was the high of the day? High was 370.48. You wait for close above that mark. That would be a good entry point to add or open a position. Then watch the weekly chart. Watch for close above 384. We get that close, add more, and then this upper band of resistance here will be your upper band of resistance, kind of like the cat of the bag. This line here will be your upper band of resistance. So it's a good chart. Again, on a 4-hour chart, you have resistance above. You bet, Colton. Twilio? Colton, I didn't forget about your question. We'll go to that at the end, okay? Just in case people need to drop off, I'll go to their charts. And I am now using Twilio to send out text alerts. If my developers can ever get it to work properly, it will be great. So when I send out an alert, or my people send out an alert, it goes to text, or should go to text. Did a test today, didn't work. Hope my developers are listening. All right. Twilio, monthly resistance, we're right at it. A lot of resistance here on a weekly basis as well. RSI is looking really good. I think the shares can be bought. Let's get rid of this. On a break above 129 per share. Daily chart. Yeah, I like that 129 mark. If it gets back down here to 119, you can open up a position there, but just keep it stop right below 114.71 per share. So I like it. Two ways to play it, or a mixture of both. On a breakout above this resistance level, or on a pullback to this support level here at 119 and change. What else we got? Etsy. I get packages from Etsy from my daughter and my wife. I don't even know what the hell they sell. I know it's got to be girl stuff. And I'm not even going to look at the chart. As much as I know gets spent over there, buy it. Buy the stock. It's got to be making money. All right. A monthly chart. Not the best of trend lines I drew here, but okay. I don't see a rush to go running in here for a couple of reasons. One is that Stokes have really pulled back. They're just beginning to hook up now. Normally you get a little bit of back and you're feeling you want to see higher lows get put in. We're not there yet. So I don't see a reason to go rushing in at all. I think it's a developing chart. It's a bullish chart, no doubt about it. You do have some resistance at 53.25. Where do we close today? 53. So we're 25 cents off of pretty serious resistance. A very good day today. Shrugged off the overall market. That's a tell. That's good stuff. But again, stop dead here at resistance. It did what it was supposed to do. Broke out, pulled back to the retest. Continuation move higher. RSI looking solid. Actually, I'm sorry. This is a weekly chart. I keep doing that today. Weekly chart. It's doing what it's doing. It's supposed to be doing on a weekly basis. Rising RSI. Rising Stokes. Again, we're at resistance. Now to a daily chart. I like the chart. I think it's going to move higher. I think a close above 53.25 by the end of business tomorrow. You could add or open up a position here on Etsy, and I would just move a stop up next week. Don't keep it too tight because they'll try to pull it back and retest, try to push it back down if the markets begin to weaken up. But I would keep a stop just below the 53.25 mark. If the markets weaken up, you may want to stay small with the position, but I like the chart. Four-hour view, again, this 53.25 mark is everything right now to this stock. 2-hour chart, a little bit of weakness into the close. Not much, though. It's a good chart. I like it. What else do we have? All right, so webhook. Well, a webhook, I don't think it's a... All right, so a webhook, knowing from having a website, and you integrate functionality into your website, like what the webhook probably is for TrendSpider could be an integration of some sort. Yeah, you see how it says your website here? So let's run a test. Now, what that does, I have no idea. I have zero idea. I'll ask him for you. Now you got me thinking about it. You're welcome, Manoj. My pleasure. When alert triggers URL, we use alerts across the body. You can place it. Oh, they have a blog post about it. These guys work night and day. I'm telling you. What are webhooks? See, we're learning together. Webhooks are a faster way to receive notifications when your alerts fire. Instead of receiving an email or SMS message, we'll send an HTTP post request to the URL provided by a user. This will allow you to trigger third-party systems, trading bots, and other automation activities. Very interesting. Yeah, I'll send you this article, or blog post, I should say. But me entering my my website's not going to do anything. They're looking for some sort of protocol to get set up. You need a developer to set that up. And there'll be some sort of functionality. If an alert is triggered, something happens. It's like if this, then that occurs. What that would be, I don't know. I'm going to ask them. I talk to them all the time, the owners. So I'll ask about it. Thanks for bringing it up. Maybe we could do something on the site with it. Well, you may not need one, Colton. You may not need one. I'll ask them about it. Maybe there's something we can integrate with our website and put something in the members area. I don't know. Is that something you'd be interested in? I'll ask them. I'll send them an email, or you got it. Any other symbols, folks? We did Northrop Grumman, did Baba, we did Twilio, we did Etsy. All right. All right then. With that, I'm going to say thanks for joining. Everybody have a great night, and I'll talk to you tomorrow. Thanks, Galton. It was great fun for me too. Be well.